Jeff, thanks for joining me.
Hey, Steve, thanks for having me again.
Hey, we are talking about high interest rates freezing residential real estate. We got some numbers of sales of new homes falling 4.7% in April from March. Existing homes dropping by about 2%. Uh, Home builder sentiment in May falling. First monthly decline in the home builders confidence index since last November. And a lot of folks are pointing to the fact that the average interest rate on a 30-year fixed home mortgage is now back above 7% back in mid-April as driving all of this. Uh, I think we're both going to probably largely agree that high mortgage rates are not good for residential real estate, but your thoughts?
I think in a lot of ways I would agree with that sentiment. I think if I were a large scale home builder, I'd get really, really smart, create my own financing company if I didn't already have one, and provide lower rates. And I would probably sell a hell of a lot more houses than what the average home builder is going to build. I mean, home builder is going to sell because I've already made my profit, and I'm going to continue to make profit on the interest. Why not?
Yeah, and I mean, we have seen a lot of home builders do that, and that's definitely one of the reasons why new home sales have held up a lot better and done a lot better. And I think
Yeah.
we also have the issue on the existing homes, the golden handcuffs that we've talked about, that if you're a homeowner and you have a low mortgage rate, there is not a lot of incentive if you don't have to sell that house and get another house that's going to be less dollar per the money at that higher financing rate. So you're kind of locked in there, which is also taking inventory off the market.
Absolutely.
And, I do think though the hope out there, and it's one a lot of folks have, is that rates will come down. I think futures markets are still forecasting a rate cut later this year, but that's gone from an expectation of like five cuts at the beginning of this year to just one. So we've certainly, with how sticky inflation has been, we are operating in an environment where there's definitely concerns that financing is going to remain challenging and perhaps longer than was initially anticipated. And that's going to make things a little difficult out there in terms of residential real estate.
Yeah, I mean, look, I'd add to it. This is a real case for why people continue to rent. Rental rates may be going up, but they're still not anywhere near as high as what it costs to not just buy with a down payment, but your monthly nut that you're going to have to, the check you're going to have to cut every month to cover the mortgage, and then included maintenance costs. So, I think it becomes a much larger discussion why people continue to rent.
Yeah, and I think also you've got this issue too of just people not having to sell. So the inventory is just staying off the market. This is in a situation like you had in '08, where you had some residential home buyers that were flipping and stuff, and they were leveraged and they were just at a point where they had to unload. You've got people that are, maybe they like a new house, maybe they like to downsize, maybe they like to upsize a little bit, but they don't have to.
Right.
And with this kind of financing environment, it's pretty clear they're not going to. So I think for residential real estate, there's some of the hope it's going to get better, but for the near term, this is a bit of the environment we're just going to be operating in, I think.
I agree with that.
Okay. Well, thanks a lot, Jeff.
Thanks, Steve.